Word. Curated and presented by Bloomberg Quint's senior-most editors. Weekdays at 8 a.m.
Hello and welcome. This is all you need to know. I am Agam Vakil. Let's start off with the global markets and see how they panned out in trade last Friday. We've seen some strength come through for the American markets as most indices close in the green. As far as Europe is concerned, again, we did see a lot of strength come through, especially for the DAX. And when it comes to, the Asian markets, they are trending, mixed cues coming through when it comes to something like the Nikkei that's marginally in the red for now. But what does it mean for our own markets? Well, it's the SGX Nifty is indicating flattish opening at around 10,688, not too much to speak for. But how was it that our markets panned out last Friday? We did see tremendous strength come through with the mid-cap and the small-cap indices clearly outperforming the benchmark, which also moved up by as much as 1.2%. Among other important indices, we have the Nifty Bank, which was marginally in the green, but a lot of that strength came on account of the up move that we saw in the Nifty PSU Banking Index. Let's also take a look at some other indices which are moving in trade, and we saw tremendous strength in the Nifty Metal Index. Realty and media also advancing. Do remember, realty specifically has been at the losing end of things, but moving on, we're keeping an eye on how we've seen some indices do in the month of June, and Nifty Pharma and IT indices were the two which stood out in terms of gains. On the losing end, we did see a lot of weakness in the small cap index, along with realty and infra also bearing down on the broader markets. But what do the ADRs look like this morning? Well, we do have Vedanta, Infi, ICICI Bank and Tata Motors advancing in trade. Marginal losses for the likes of HDFC Bank and Wipro, and Dr. Reddy is seeing about a 1% cut. But moving on, when it comes to the foreign institutional play last Friday, the outgoing number was extremely small at around 157 on a net basis. And of course, DII is buying a stock worth 2,200 crores. That brings the DII number on a month-to-date basis at around 14,000 crores on a net basis, and the FI number, well, a net sell of around little over 4,300 crores. We'll be watching out for these numbers and how they pan out for the month of July. That said, when it comes to for trade last Friday, it was the heavyweights. Reliance Industries, HDFC, L&T and ITC were the ones which were driving the indices higher, and as you can see, the Nifty ended with gains of around 125 points. But let's also take a look at the futures and options skews. As one might expect, accumulation towards longs in the Nifty futures. Bank Nifty, on the other hand, really didn't see too much change in its underlying or the open interest for that matter. Now, let's also take a look at the way we saw open interest pan out. And as of now, in the new series, the range indicated by maximum open interest, which remains with the 10,600 put and the 11,000 call, is that 400-point range between these two levels. We can expect the Nifty to move within this range. And what happened on Friday wasn't any different from the max OI. So we did see a lot of addition in the 10,600 put, and a little bit more writing in the 10,000, or rather the 11,000 call. Let's take a look at some of these key variables in terms of the PCR. That moved up higher at around 1.47, and it's the same for the Nifty Bank PCR as well at around 0.83. Coming now to stocks, we saw a lot of longs building in Bata India, and we also saw a lot of longs building in several other stocks like IDBI Bank. In fact, this one advanced by as much as 10%. On the losing end, we did see some weakness in Hero MotoCorp, shorts building with a 15% increase in open interest, and we actually saw some short covering with Larsen and Toubro. Even as the underlying advanced by as much as 3%, we saw a decline of 3% in the open interest. So a lot of stocks out there to watch out for, and we'll wait and watch as to how the Nifty trades this morning and how that pans out for this week as well. But now let's go across to Paul Allen for the top international headlines.
The world's biggest trading bloc is a step closer after Asian ministers said a deal could be signed this year. The 16-nation regional comprehensive economic partnership includes China and India, but not the United States. Japan says it's vital that Asia flies the flag of free trade in the face of growing protectionism. RCEP would cover 1/3 of the world's economy and almost half its population.
We are being flexible in our discussions while maintaining high standards. Unlike the TPP, RCEP includes countries in different stages of development, and we have to be flexible when taking this into account. The final agreement we want to achieve will be a package that takes this fact into consideration.
The Hong Kong government says the city's future is bright as protesters demanded more democracy on the 21st anniversary of the return to Chinese rule. Demonstrators denounced one-party rule on the mainland but failed to disrupt the annual flag-raising ceremony. Chief Executive Carrie Lam attended the event with her predecessors Si Wai Leung and Tung Chi-Hua.
I have even greater confidence in Hong Kong. As long as we remain focused and stand united, I am sure that the best is yet to come for Hong Kong.
President Trump has repeated his demand for higher oil production, saying OPEC is manipulating the market. He told Fox that Saudi Arabia will have to raise output, even as the White House backed away from his earlier tweets, saying he persuaded the kingdom to pump more crude. The Saudi news agency says the two sides discussed prices and supply, but didn't make any reference to production levels. LeBron James will launch his challenge for another NBA title from Los Angeles next season. He's leaving Cleveland for the second time to join the Lakers in a 4-year, $154 million deal. It's the third time in 8 years that basketball's biggest star has changed teams. He returned to the Cavaliers in 2014 after 4 years in Miami and had said he wanted to finish his career in Ohio. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
If developed markets behave themselves, emerging markets would be in much less trouble than they are now. But, you know, there are idiosyncratic risks in emerging markets which are driving each currency, each national market assets in different directions. And there are external shocks all coming together. If you look at the group dynamics as emerging markets, the picture is benign. You know, inflation is low and reserves are high and debt is low and so on. But if you look at individual markets, there is a completely different story. Several nations are fighting high persistent inflation, the political uncertainty, and even the stronger economies like India are suffering now. So it's pretty brutal at this moment, and we'll have to see how it pans out.
Back to local equity markets. Stock of the day today is Tata Steel on back of signing of that joint venture deal with Thyssenkrupp Group in the ratio of 50-50 as mentioned earlier. Well, the name of the JV will be Thyssen Tata Steel BV, and Tata Steel will transfer external debt to the tune of around 2.5 billion euros. Apart from that, Thyssenkrupp Group will also transfer in $4 billion which includes a liability of 3.6 billion euros of pension liability. This will have an identified synergy to the tune of around 400 to 500 million euros, and this synergy realization is expected to come in after 2 to 3 years. Both these JVs are expected. The JV is expected to create an additional value for both these players to the tune of around 5 billion euros. Tata Steel and Thyssen Group combined will have to hold at least 50% stake in the joint venture for a period of around 6 years. How different is the final deal from the one that has been announced, that was announced back in September 2017? Well, the first one is the reduced economic interest that we're looking at for Tata Steel. Thyssen Group's stake in JV at the time of the potential IPO will stand at 55% as compared to 50% which has been discussed currently. This is mainly on account of Tata Steel issuing convertible issue warrants to Thyssen Group, which at the time of IPO they could convert it into equity and get their share higher to 55% as compared to 50% currently. And also Thyssen Group will have a say in deciding the time of the IPO, given the kind of performance development that the two companies have seen from the time the deal has been signed until now. That's where capturing this kind of valuation gap, we're seeing the reduced economic interest. Also, we're looking at lower synergies from the deal that has been announced in September 2017. The present release says that the post due diligence higher band of guided synergy has been reduced to 400 to 500 million million euros. This is as compared to 400 to 600 million euros that has been guided earlier in September 2017. Also, we're seeing some kind of ambiguity in terms of the timeline structure, given that the company Tata Steel maintains that it expects to form a JV by the end of this year. However, in the con call, they guided that they expect the regulatory approvals only to be in advanced stage by the end of the year, clearly reflecting that they could exceed the timeline. Also, ThyssenKrupp has guided on a different timeline of around 12 to 18 months.
Let's shift focus to currency and commodities market. Speaking about Indian rupee first, it strengthened on Friday after losing for 4 consecutive sessions. Now, remember, the home currency climbed nearly 0.5% to end at 68.47 levels against the dollar on Friday. Now, this was largely supported by recovery in the regional stocks despite rising crude oil prices, trade war tensions between US and China, along with a sharp sell-off in yuan. Now, the currency still caps its worst quarter in almost in 5 years. It has depreciated close to 5% in the first quarter of 2019. Well, speaking of the bond market, sovereign bonds gained on Friday as yield on the 10-year benchmark security dropped nearly 3 basis points to end at 7.90%. Now, in terms of flows into debt market, global funds increased their rupee debt holding for the 4th consecutive session on Friday. Now, that's according to NSDL data. Well, on the global front, dollar index snapped its 3-day winning streak and ended well below the crucial 95 mark. It now trades around 94.40 levels in the early Asian hours. Elsewhere, euro continued its rally against the dollar. It ended 1% higher after European leaders reached a broader consensus on migration and refugee policy that will help the economy recover. And lastly, speaking of dollar rupee now, it is trading flat in the non-deliverable forward market, which indicates a flat opening for Indian rupee in today's trade. Having said that, let's shift focus to commodity space. Good morning, Jayesh. What cues are you picking up today?
Morning, Saloni. Let me start off with oil prices. Now, if you look at the current Asian hours screen, oil prices are currently trading about 1% lower. But this should not be too alarming or concerning, because given the fact that last week we saw WTI rise more than 8%, and it was the biggest weekly gain in more than 2 months now. Also, what has happened with this gain is that the Brent and WTI spread has narrowed down on the back of tightening in the US markets. We also understand that the recent upward movement in the oil prices has largely been supported, on account of the supply outages from right across from Canada to Libya. Also, if you look at the base metal space, the index itself posted its 3rd straight weekly decline. As far as individual base metals are concerned, we had aluminium, which declined for the 2nd straight day. Copper, in fact, reached a 3-month low, and we had zinc, which declined for a 3rd week as well. Now, if you look at the other base metals like nickel, lead and tin, those managed to close marginally higher. Now, if you look at the Shanghai Futures Exchange, the base metals have in fact started on a negative note, but have recovered from the day's low. In fact, Shanghai Steel has now climbed back into the green. As far as, lastly, the gold prices are concerned, we saw some bit of weakness for gold prices. However, Friday's session was positive for COMEX gold.
Amongst the stocks that we're tracking in trade today is Aditya Birla Fashion and Retail. Now, according to a ET report, Aditya Birla Retail has signed an agreement with PE fund Samara Capital to buy food and grocery retail chain for 4,300 crore of enterprise value. So, Samara Capital will be buying AB Retail's food and grocery retail chain. So let's see how that one reacts. But we're also tracking MOIL on the back of various price changes in some of its products. We're also tracking some of the Adani Group companies which will be on focus. Now, this is on the back of a PTI report which says that Adani Group is looking to raise up to 6,000 crores via the issuance of securities and also stake sale in Adani Ports and Adani Transmission. The proceeds will be used to deleverage the power business and also part fund the takeover of the Mumbai power distribution and transmission business. So all of those names of the Adani Group companies will be in focus. We also have ATF prices which have been cut by 2.7%. Remember, this is the first cut that we have seen in the last 12 months, so positive development for some of the aviation companies. So watch out for Interglobe Aviation, Jet Airways and SpiceJet as well. The other part, you also have Bosch. Now, the parent company has said that they are looking to sell their packaging machines division for about $1.5 billion. Let's see how the Indian arm reacts in trade today. Thermax has won orders worth 340 crores, so that's another stock to keep an eye out for. We also saw a couple of bulk deals, first being in Adani Ports, where Kamas Investments bought 1.3% stake. On the other hand, you had the promoter entity, which is SB Adani Family Trust, which sold 1.3% stake. And you'll also have Minda Corp, which will be in focus. Now, Vasarch International Opportunities Fund has bought 0.9% stake, and you have KR Handloom, which is sold 1.3% stake. So this is a list of stocks that you need to track and trade today.
Now, first of all, let's understand that we must delink the crude oil increase, price increase with GST. GST is not necessarily the solution to that. If petrol and diesel is brought into GST and if the rate is neutral, in which there is no sacrifice of central and state government, then the final prices of petrol and diesel is not going to change. That is the thing. So the two are completely independent, and we don't have to mix up the two.
Okay. So recently the Bihar Deputy Chief Minister has also said that one of the ways could be that petrol and diesel will be taxed at 28% and the states would be given power to levy additional duties on that. So can that be expected, and can that be a possible solution when it comes to
is there a real benefit to anybody out of this proposal? So, but these are some of the options which can be discussed when the council desires to include petrol and diesel. So at that time, the council can decide all these options. How to tax petrol and in what form, that council can decide. But the question is, right now there are two taxes, VAT and excise. Now you are saying add a third one. Now third one adding means what? The input tax credit will be available to manufacturers so there will be no cascading for them, and to that action there will be a revenue loss.
Two companies will be listing on the exchange today. The first one is Rites, where the company had raised close to 460 crore rupees at an issue price of 185. Now the company had seen a strong demand, with total subscription being close to 60. Now it was the highest demand for the public sector company in the last 1 year that we have seen. Now the total subscription was close to 67.24 times, with most of the demand coming in from the HNI portion. The HNI portion was subscribed nearly 195 times, while the QIB portion was subscribed nearly 72 times. The retail portion saw a subscription of close to 15.7 times in this IPO. And the street is expecting a strong listing from this company, and the listing gains are expected to be around 20%. So let's see how the valuations would stack up. Now, at issue price, the market capitalization was close to 3,700 crore rupees. The price to earnings was 11.4, market cap to sales was 3 times, and EV to EBITDA was close to 6 times. Now, if it lists at 210, the market capitalization would be close to 4,200 crore rupees. Price to earnings would be 13 times, market cap to sales 3.4 times, and EV to EBITDA would be 7.2 times. And if it lists at 220, then the market capitalization would be close to 4,400 crore rupees. Price to earnings would be 13.6, market cap to sales would be 3.5, and EV to EBITDA would be 7.7. Now, the second company that will be listing today is Fine Organics. Now, the company had raised close to 600 crore rupees at an issue price of 783. Now, the company had seen a subdued demand when compared to Rites. The total subscription was only 9 times, with most of the demand coming in from the HNI portion, which was subscribed nearly 21 times. The QIB portion was subscribed nearly 13 times, while the retail portion saw a subdued demand. It was subscribed only 1.6 times in this IPO. Now, the street is expecting a subdued listing when compared to Rites. The listing gains are expected to be around 5%. So let's see how the valuations would stack up. At issue price, the market capitalization is close to 2,400. Price to earnings is 23 times, market cap to sales is 3 times, while EV to EBITDA is 17.1 times. Now, if it lists at 800 rupees, the market capitalization would be close to 2,450. Price to earnings would be 24 times, market cap to sales 3.2 times, and EV to EBITDA 17.6 times. And if it lists at 820, the market capitalization would be close to 2,500. Price to earnings would be 24 times, market cap to sales would be 3.2, and EV to EBITDA would be close to 18 times.
The Indian insurance regulator has cleared the way for LIC IDBI Bank deal, but this, as Bloomberg Quint had reported earlier, comes with a caveat. Official sources in the know of the matter told Bloomberg Quint that LIC has not approached the insurance regulator looking for an acquisition, but will be allowed to invest up to 51% in IDBI Bank as a strategic investor. However, LIC will have to submit a roadmap on how it will pare its stake to 15% in the bank eventually. This, as the IRDAI investment norms do not allow a life insurer to invest in any company for more than 15%. The time period for reducing LIC's stake could be a minimum of 5 to 7 years, which is what the official sources are telling Bloomberg Quint. This may translate into LIC having no preferential or management rights in the board of the bank, which means that IDBI Bank would essentially remain a board-run entity.
So Tata Motors had another strong month of sales. So they have sold close to 57,000 units in the month of June, which is a strong 54% growth on a year-on-year basis. Now, not only has the commercial vehicle segment done well, but it's also their passenger vehicles business that has seen a strong growth of 64% on a year-on-year basis. Also, we are looking at Maruti Suzuki. They saw their sales numbers jump up as much as 36% in the month of June. Now, they have done close to 1.5 lakh units, which is significantly higher than our estimate of about 1.31 lakh units. Now, the strong outperformance, this was led primarily by a healthy demand for its compact vehicles, which includes the likes of Swift, Dzire, Baleno, among others. So we could possibly see a positive reaction on the stock in today's day of trade. As far as M&M Auto is concerned, they have sold close to 45,000 units in June, which is in line with our estimates and a strong 26% growth. Now, the domestic passenger vehicles business, that had an okay month, nothing to write home about, but the commercial vehicle segment saw a strong 27% growth, while their exports, they grew by as much as 87%. As far as Royal Enfield is concerned, it is the only two-wheeler on our list to have come out with their June sales numbers. Now, they have done close to 74,500 units, which is 18% growth against the same month last year. Now, what's working for them is the premium end bikes with the 350cc and higher engines, which has reported a 29% growth along with a healthy uptick in demand. But that's not all. We have more companies that would be announcing their June sales numbers over the course of the day. So let's take a look at them. In the two-wheeler space, for Hero MotoCorp and TVS, we are expecting a healthy double-digit kind of a growth there. For Bajaj Auto, the lower base should help them, and we are expecting a 59% growth led by a healthy demand for their three-wheeler and an uptick in their export market as well. As far as Ashok Leyland is concerned, we are expecting a sales number of 14,000 units, which indicates a 13.5% growth over the same period last year. And for M&M Tractors, we are expecting about a 9% growth.
Here's some more stocks to watch based on Friday's delivery volume as well as buying and the selling that happened in the market. The first stock that you have to keep in mind, that would be Interglobe Aviation. Now, that was down about 1% in trade and saw delivery selling of more than 160 crores. The delivery volume more than doubled as compared to its 5-day average, and the total volume too surged nearly 120% as compared to its 5-day average. Second stock to watch out for, that would be IDBI Bank. Now, though this was up about 10% in trade, but saw delivery buying of just about 60 crores. The delivery volume, in fact, surged less than the total volume. So the delivery volume was up just 60% as compared to its 5-day average, while the total volume more than doubled as compared to its 5-day average. Last and final stock to watch out for, that would be L&T Finance. Now, remember that this is the second day in a row that this has featured in the buying list. Friday's gain was about 2.5%, which saw delivery buying of nearly 90 crores. The delivery volume surged just about 47% as compared to its 5-day average, and the total volume surged about 51% as compared to its 5-day average.
Lots of stories on the website currently, and you'll find all the live market action right here on Bloomberg Quint Live. For the stories that are on the website, here are just a couple. In pharma, Dr. Reddy's Laboratories is recalling over 2.36 lakh bottles of atorvastatin calcium tablets used for lowering cholesterol from the US, according to a report by the US health regulator. The complaint was received for a defective tablet with an embedded foreign object that was observed in a bottle, the US FDA said in a report. Now, you'll also find the coverage of the World Cup and what a World Cup this is turning out to be. Already so many upsets, and then in the knockout round that took place over the weekend, first Messi's Argentina and then Ronaldo's Portugal have had to fly back home. Then home side Russia beat 2010 champions Spain in a penalty shootout. And then in late night drama, Croatia beat Denmark in another penalty shootout to book their place in the quarterfinals. One thing's for sure, it might not be such a bad idea to back a dark horse in this competition. Well, that's all you need to know going into trade today. Up next is Indian Open, and that'll take you through Market Open. Thanks so much for watching. This is Bloomberg Quint.